Hello, everybody, and happy Monday again. So last week, we talked about how the stock market, in a lot of technical ways, is overstretched, overvalued, and is due for a significant correction. I don't think I said this last week, but the expectation is the market could fall anywhere from 50 to 70% just to get back to what would be considered normal, where it could start growing again. But we also say, wait, just because the stock market goes down doesn't mean everything else goes down, and that wealth moves. When the stock market goes down, the wealth doesn't evaporate, it goes somewhere. Now, for some of you, many of you, this is going to be just review, but Walt and I have this view of the world that money and wealth are different. Wealth is what people, the really rich guys, talk about. They don't talk much in terms of money. There are foundationally three kinds of wealth in the world. There's spiritual wealth, very powerful, but you can't invest dollars in that. Well, there's other kinds of wealth. There's wealth from the earth, oil, gas, timber, copper, iron, gold, silver. You hear us talk about this all the time. Well, I call that low tech. Cotton is cotton, doesn't change. 200 years from now, it's still going to be cotton. Meanwhile, on the other side, there's something called human created wealth. Taking that aluminum and making an airplane. Wealth to me. So is my car, computer, cell phone. That, however, is a moving target. The high tech changes. 150 years ago, that was the railroads. And we all know the progression. Cars, radios, TVs, microwave ovens, here we are with computers, and we're heading toward AI, quantum computing, nanotechnology, micromachinery. We know all that's coming. What you'll find historically is those two sectors, the earthy side and the humany side, rarely move together. During times of optimism, creativity, look what we can do. No one is interested in iron ore investments. I don't blame them. Meanwhile, if stocks get too far ahead of themselves, and the stocks and the companies are different things, the stocks start to go down, the mentality changes. I can stand on my land. You can't print gold. You got to eat. You got to have water. I want that. And the money sloshes back and forth. Here's the chart that shows it. What we've got here is just a comparison of the Goldman Sachs Commodities Index compared against the S&P 500. And all we're doing is comparing earthy side versus humany side. This chart goes back to the late 1960s, early 1970s. If you see a spike, for example, right over here, see the first spike, that would be commodities, the earthy side high, and the stock market low. Well, what was going on in the early 70s? The Arab oil embargo. Oil goes from $5-6 a barrel up to almost 40. Someone made money on that. You might guess the stock market did not do well with oil spiking that high then. Meanwhile, the earthy side commodities did great. All right, the next spike, kind of in the middle here. That's the 1990 Gulf War and the savings and loan crisis. I'll put this down just for a minute. Let's take you back to that time. Remember when we invaded the Middle East and Saddam Hussein burned his oil fields? It was apocalyptic. The smoke coming up off the desert, people freaked. Simultaneously, we had a savings and loan crisis, a banking crisis. There are no more savings and loans out there. They're all gone. Well, put those things together. Stock market down, earthy side rose up. All right, so now let's go to this part, the big dip. That would be the opposite. That would show you stocks high, commodities low. That's .com. I was back in that era. I can't tell you how exciting that was. Everybody was making money in Intel, Lucent, Sun Microsystems, Pets.com. Up she went. And we all know what happened. But during that run up, no one was interested in investing in iron ore. Oil prices were collapsing, and the money was made on the stock side. All right, let's run up to the next peak over here. That's 2008, Lehman Brothers. Most of us lived that. Same story. Stocks go down, commodities go up. All right, if we go to the bottom over here, you see that little dot right at the very, very bottom? That bottom was a 100-year low of the earthy side versus the stock side. You don't get a chance to buy at 100-year lows very often. That's kind of when we started transitioning over to this philosophy you've heard us talk about. If this plays out as it has done, this chart actually goes back further, but you get the idea. The last 100 years, the low tech side is due for a very big run up. Simultaneously, you will see the human wealth created side probably coming back down to earth the way we talked about last week. It's just a cycle. It's not the end of the world or on either side. Our job here is not to day trade. All we want to do is catch the big trend, ride it up, even if it's tough. It goes up, then we have a big correction down, but every high gets higher and every low gets higher. We're okay with that. That's the trend that's underway right now. Wealth isn't destroyed, wealth moves. I should add a caveat to this, and this is getting a little long. Two things really can destroy wealth. War destroys wealth, and natural disasters destroy wealth. As long, though, as society is operating relatively normally, wealth is just moving. We believe we have you positioned well to ride this thing up. But please know, we're not married to either side. We don't love the earthy side. We don't love the human wealth created side. They don't love you back. Just follow the trends. We believe we'll do very well for you. So with that, I'll turn it over to Walt.